The last time we had a conversation about the performance of CIMERWA, you made some interesting promises, and you asked me that next time we meet, I should ask you about it. A little bit of highlights. How did you perform?
Indeed, we made some promises, and the promise was that we will continue the solid performance by the company. Looking at the last 6 months, we have kept that promise. And just to give you some highlights, our top line has grown 45%. The 6 months ended March, as you've seen in the release that we gave, compared to the previous period last year. So our top line is up 45%. Our net profit is up by something like more than 400%. The net profit to about 5 billion. If you look at our retained earnings, it has grown by almost 5 times to about 9 billion. So very solid balance sheet, and our cash position is very healthy. It has gone up by something like 80% to stand at about 16 billion Rwandese francs. So indeed, we've kept our word to not only yourself, but also to the shareholders and to the stakeholders, and we are confident that we will continue the same trend.
Is this impressive performance at the backdrop of that we are out of the pandemic, now trading without fear of COVID, or is it a deliberate plan according to your promises? You said you had a couple of activities to undertake.
I think that's a very interesting question. I guess what you're asking me there is, how did you do it? And I put it down to 4 things. Yeah. The first part is a resilient organization. And what do I mean by this? I mean a very strong team, not only in terms of management and staff, to whom I give a lot of appreciation and gratitude for the efforts they have made, but also the board, who are giving us the guidance in terms of governance and also strategy and other topics. So, and in terms of speaking to that resilience, it's also about what we have learned in the last through the COVID pandemic and through the various disruptions that have come through in terms of internationally, including the very latest one, Ukraine, Russia, that you know very well. So a resilient organization that is, which has learned to adapt in spite of this kind of volatility and this kind of challenges. The second point is around a focus on execution. Yeah, because as they say, strategy is not enough. Long-term success or success is dependent on how effectively you execute. So like we spoke last time, we have a very clear strategy, but what we've really been focusing on in CIMERWA is delivering on that strategy through effective execution. And we do this by various means. I'm just going to give you one example. In terms of the culture that we are trying to build in the company, we call it Jabali. The Swahili word, it means, yes, Jabali is rock, strong as a rock. So, and it's a very systematic group-wide culture change program that we have really pushed hard in CIMERWA. And at the heart of it is having a performance-based organization, which speaks to very many elements. We call them the 6 vital elements. You'll see some of them on the wall actually behind you. So that's helped us a lot in terms of getting everybody mobilized around executing effectively. Because
everybody, you mean right from the CEO to
from the board down to the person on the shop floor. Because the culture is about, it's everybody that has anything to do with the organization. Yeah, so in terms of having a clarity of purpose, ensuring there's the right resources, measurement and feedback, continuous improvement, stakeholder engagement, and all those kind of things.
What about productivity? Does it affect productivity as well?
Yes, of course. Effective execution means that you're moving faster. Yeah. On the various elements of the strategy, and in fact one example is exactly the one you've touched on, which is productivity. Yeah. I believe when we were speaking last time, our capacity utilization was around about maybe 80 or just around there. But in the last 6 months, for the period ended March 2022, our utilization was more than 90%. Yeah. I think you know about the famous 600,000 tons.
Yes.
Yeah, if you use.
So where are you now?
Yes, we are now above in terms of the utilization rate is more, for that period, we were more than 90%. If you take the half-year performance, the period for which we've released the results. So it's a really brilliant effort, and it's coming from, that focus on execution. There are many other examples. I give you one more, and this is around exports, where we have grown our sales by more than 60%.
That is in terms of volume.
In terms of volume, yes, to those export markets, which is one of our very important channels. We do export about roughly 20%
of your production.
Of our production into exports, and it's very important because it's giving us, forex. So that is the second element in terms of coming back to your question about, how did you do it? I think the third element, which is really important also, is the fact that we have what I'd call an enabling environment. And what do I mean by this? What I mean is, just by the fact that we are in a jurisdiction which is where the governance is well taken care of, then we were able to wade through the challenges and the volatility much better than other places or other jurisdictions or other economies. And I must thank the authorities, the government and the various departments for the interventions like manufacture, build to recover, and also having a very, very robust vision, which just because of that, what it does is it translates directly to us into, for example, a healthy projects pipeline. We have a very healthy projects pipeline, which cushions us a little bit against all these global shocks. Yeah, for example, in Rwanda, as you know, we have some really big anchor projects, flagship projects. Bugesera Airport, which has kicked off in earnest. We have been supplying it since back end of last year, and that in fact is taking quite a good. It's a very good contributor to our top line. Amahoro Stadium, which has also kicked off recently, and this is also going to be, a very, very good cushion to us in terms of volumes and top lines, and various other buildings. You saw during Chogam the other day, the inauguration of the Twin Towers, which I believe was stated to be a project worth about $100 million. And I believe the time frame was given to be something like 24 months, starting now.
So the coming months are going to be okay for you?
So I guess the point I'm making there is that because of being in a jurisdiction that is focused, and with a vision that is enabling this kind of projects to be in the pipeline, it is giving us a very good view or in terms of projections going forward, but it also helps us to cushion against volatilities like the impact of COVID. So this enabling environment has really been useful, and it's what it has done to the industry is that in spite of COVID, in spite of all these other volatilities, international supply chains, and so on and so forth, we have continued to see growth within the industry, cement industry. I think when we spoke last time, we were talking about, at that point in time, I think we were telling you about a very solid growth of almost 20% in terms of the market. If I consider the 12 months ending March, we estimate that the market is now above 900,000, which is a further 3% on top of the earlier 20. Yeah. So you can imagine, first of all, not many countries are able to say that, and not many sectors are able to say that. So again, a lot of it is down to not only us being prepared with our strategy or internally, but also combining that with the fact that the environment has been enabling to us.
We're expecting to raise more funds on the stock exchange from the conversation we had there last time. But household income is being affected by other dynamics. People's pockets are being calculated dependent on dynamics like the Russia-Ukraine war, which affects bottom line of many companies, right? Especially those that are in direct link with people's expenditure. Is this affecting you? And if yes, how are you going to deal with this?
Wherever you are, we are feeling it at a personal level, at a company level, world level. You know, some commodities being scarce. You know, who had it top of mind that Russia, Ukraine is supplying something like 30% of the world wheat. You know, it's just been kind of a very opened up our eyes even more of how dependent we are as economies worldwide. So we have definitely felt the impact as a country, as a region, as a continent, as a company. And I'm sure you've seen the announcements, or even on the pump when you go to fuel your car.
Yes.
That the cost of fuel has gone up by 30, 40, 50%, depending on what type of fuel you're talking about. So we have been no exception, because we are not in a vacuum.
Yeah.
We live in the same society as everybody else. So that's definitely affected us. And what we have done as a company is two things. One is to try to, as much as possible, to mitigate internally the impact of these shocks coming from the global supply chain by working on cost reduction and also some innovation and further process efficiency, because these allow us to make sure that the cost increases are minimized internally. And when we do that, then we are able to not only protect our margins, but we are also able to at least minimize the amount of burden we pass to the consumer in the form of price increase. So we are really, really focused on that, because we want to protect our margins, but we also want to take care of the pricing in the market, making sure that our product is as affordable as possible. So those are sort of internal measures, and there's all sorts of initiatives there. Secondly, what is also helping us is that we are CIMERWA. We are a truly local brand. So what that means is that we are less being an integrated player that is doing the production in the value chain all the way from the quarry through the processing in the plant and all the way to the customer. Most of our operations are local. There is elements we import, for example, certain fuels or spares and so on and so forth. Then these are the ones that have been hit. But I must say we are cushioned by the fact that our operations are largely local, because we quarry in Rwanda, we process the material, we produce clinker, as opposed to other players in the industry who might be not doing the 80%, which is the production of clinker, and importing that clinker instead, because the cost of clinker, I believe, has gone crazy, maybe even doubled, by the time it reaches the ports in East Africa, Mombasa or Dar es Salaam or wherever. So that is what we are proudly pushing by being a truly local brand that is focused on strengthening Rwanda and as much as possible having most of our inputs, be it transport, be it raw materials, and so on and so forth, being local. And what we're also doing is making sure that we've diversified on various respects, so that we are not over-dependent on kind of singular points, which when they hit.
So did you diversify?
Yes, I give you an example in our route to market. Okay, so in our route to market, we are out of all our sales, we break them into various sections, what we call channels. Yeah, so there is a channel that is the small trader. There is a channel that is a wholesaler. These are the ones that most people tend to know. There is another channel which is major projects or construction, like the ones I mentioned earlier on, the airport and so on and so forth. Even government itself is a channel, because they run some projects like some schools and so on and so forth. Exports is a channel by itself. And the dynamics for these different segments or channels can be quite different. The people who are hit most by the COVID and the current inflation induced by Ukraine and the Russia conflict is mostly what we call the trade, which is the small retailers and the wholesalers, the people selling to you and me in Nyabugogo or whichever other towns. Yeah, but these other channels, like the construction segment, is mostly driven by either private sector. It could also be PPP, private-public partnerships, and a lot of these can have kind of a specific funding. I gave you the example of the equity building. So the kind of the dynamics are different, because some of these that have been started now. For example, they announced $100 million twin towers in downtown Kigali. If it's starting now, it will need cement and building materials for the next 2 years. Hopefully by then, the protagonists in Ukraine and Russia, they'll have settled their issues,
And speaking of export.
Yes, in fact, I was coming to that. Yeah, and the export, the reason why we also diversified into that and really placed a very specific focus is we have found the export markets in inland Africa, which is where we are located, around the Great Lakes. In spite of the turbulence, and in spite of geopolitical issues, in spite of the challenges that they have, they are pretty resilient. And I think you can look at the last 20 years, many years. So we take the view that in spite of all the challenges that these locations are facing, there is an underlying resilience, and the people are still constructing houses and making buildings there, and we stand ready to support that growth. And I must say we are the most strategically located entity to service, because we are in southwestern Rwanda, as you know, and by being there we can very easily reach Rwanda itself, Eastern Congo, Burundi, we can even Western Uganda, we can reflect into also Western Tanzania. So all those are options for us. Yeah, that's why that segment, which has got its own dynamics and has demonstrated a high level of resilience, is quite important for us. And the beauty with it also is, the revenues coming from that are coming in dollars.
Speak to me about the attitude or the philosophy of your board around that particular segment of export, especially that you say that strategically located gives you the advantage of supply to these markets across the borders, all these borders around Rwanda, who are closer to you than your competitors.
In heavy manufacturing or cement, there's something called natural market. So natural market means basically if you have
nothing to do with the borders.
In fact, when you're talking natural market, you forget political boundaries.
Yeah,
Okay, you put a dot and a radius around your plant. Okay,
then you the market.
and that is your natural market, and it tends to be like, you know, less than 500 kilometers. 100 is better, but you know, so if you look at that, considering where we are, we radiate into the whole of Rwanda, parts of Uganda, parts of Tanzania, parts of DRC, parts of Burundi. Of course, we work within the guidelines and the constraints of ongoing protocols or ongoing, you know, guidance by the various governments, you know. So depending on all that, some markets may be more attractive than others. But the point I'm making is that as CIMERWA, we are very strategically located compared to our colleagues in the industry who would have to bring this product from quite far. For example, if you think about the people in Kenya or Tanzania or elsewhere, that product has to travel quite a distance to reach us. So if you think long term, we have that advantage. There's an integrated player who is producing right there and is radiating that product, not only domestically, but to those export markets. And again, for me, you talked about philosophy. For me, it's about we need to think about Rwanda for the region, Rwanda for Africa, Rwanda for the Great Lakes, Rwanda for East and Central. Okay, so as we build our strategy, as we execute our strategy going forward, we need to think beyond the political boundaries and think about how can we service the region, how can we build, how can we be big to the extent that you know, we are truly you know, a very big player serving the region. It doesn't have to be only companies that have come from Europe or the USA that can do this. We need to dream big. Yeah, and also I believe that we can do it, and I have no reason to doubt that. And that's what we are executing. You know, by export growing to by 60% is a very, very practical demonstration as a step in that direction.
You spent quite a substantial amount of money to sustain the company during COVID because of safety issues, health issues. You are incurring quite a lot. Now that COVID has given us some breathing space, where are you investing the resources that you are putting into safety measures?
We have a consistent strategy that specifies a set of strategic objectives or levers or priorities. And one of them is around governance, corporate social investment, and health and safety. So even before COVID, this was already an area where we were investing significantly. Yeah, probably in the region of, on an annual basis in terms of corporate social investment, it's something like 350 million Rwandese franc on an annual basis. And this is not counting the, you know, the investments around health and safety, which by virtue of the nature of our business, you know, this is not things that we should only do when there is COVID. Of course, there was a bit of an incremental expense, but I would say still we are not slowing down on that. We are continuing with the same intensity, the same rigor in terms of ensuring that we are focused on what we call zero harm. That everybody, our staff, our partners, come to work in CIMERWA in whatever locations, be it at the plant, be it at the corporate offices. They come whole in the morning and they go back to their families without a scratch in the evening. Yeah, I can tell our customers, suppliers, our shareholders and other stakeholders that to expect that the tempo we have shown should continue going forward.
Thank you.
Thank you.